Hi, my name is Scott with FaberGroup Properties in Royal LePage. Today we're going to be talking about a hot topic for homeowners on speculation and vacancy tax. We're joined here with Adam Pawlovich. Adam, it's good to have you.
Thank you for having me today, Scott. Pleasure to be here.
Yeah, great. So why don't you tell us a little bit about yourself and what you do here in Victoria?
Well, I'm a lawyer here in Victoria. I practice at a firm called Vangenne Company. We're located at the corner of Fairfield and Blanchard, and we're in the old Savoy building.
Cool. Perfect.
And I've been practicing for about a year now.
Great. Excellent. Well, we're going to just dive right into it. In the next month, we're all going to be hit with a speculation and vacancy tax where we're going to have to fill out a declaration. What is speculation and vacancy tax?
Well, that's a very good question, Scott. So as most British Columbians are aware, housing affordability has been a very key topic in the news in the last number of years, with property values rising, which has also resulted in a lot of people unable to enter the housing market as potential purchasers. So the NDP government in BC has taken measures to try and bring some more inventory into the market for prospective purchasers. And they're really focusing this legislation on people who are either owning properties who are not residents of BC.
Okay.
Basically, the properties are just laying vacant, or people who are using these properties as investment properties, such as home renovations to flip the properties for quick sales after those renovations are done.
Okay. So just to recap, just in small words, speculation tax is essentially a tax that was implicated by the government to free up properties that are laying empty or vacant, so that renters can have more places to live.
Correct.
Perfect. So that's the main reason why this tax was put into play?
The main reason why it was put into play is to free up more inventory for prospective home buyers.
Oh, okay.
Especially for people that are not, or homeowners that are not residents or living in BC. They are either leaving their properties empty, or they are speculating on the real estate market, i.e., they are buying properties, renovating them, and then selling them quickly to take advantage of a rising market.
Yeah. So, Adam, if I was, living in Alberta and own a property in BC and it's not rented, what's going to happen?
Well, you're going to be subject to the speculation tax and vacancy tax.
And how much tax are we talking here?
So there's two different tax groups here that we need to be concerned with. So for other Canadians in different provinces or permanent residents, the tax will be 0.5% of the assessed value of that property as of December 31st of the taxation year.
Wow. So that could be quite a lot of money.
Right, and that's one group. The other group has to do with foreign nationals or individuals which the government has defined as satellite families.
Okay.
And satellite families are essentially those individuals where most of their income is not derived in Canada, but it's offshore. It could be in Asia. It could be some other tax shelters like down in the Bahamas. Those individuals will then be taxed at 2% of the assessed value as of December 31st in the taxation year. So it's a pretty hefty tax.
Yeah, they're going to be hit with some big numbers, that's for sure.
And of course, that's in addition to the property transfer tax, the 20% for non-resident buyers outside of Canada.
Foreign
as well.
buyers.
Foreign buyers, correct.
Yeah. So to get ahead of the curve, we're all going to receive something in the mail as a homeowner called a declaration, and there's going to be some questions on there.
There are.
What kind of questions is the government going to ask just to find out if you're exempt or not from this speculation and vacancy tax?
Right. So every homeowner is going to get this declaration in early January. It'll be a little bit after when they get their assessed value letter from the government, and it will list all the properties that you own. If you only own one property, you're going to have nothing to worry about.
So it's going to ask a question then, like, is this your primary residence or
Correct.
your secondary residence?
So if you own multiple properties, you can designate one property as your primary residence, of course, but the other ones, you may be subject to this tax, or you might qualify for one of the numerous exemptions.
Oh, okay.
But it is the obligation of the homeowner to complete this declaration and then send it back to the government, and the timing for that will be March 31st.
Some big changes going on in BC, that's for sure.
Big changes.
Yeah. Great. So is there anything else that you want to touch base on about speculation tax and vacancy tax? Anything to be aware of, if you're a homeowner right now?
Well, the biggest thing I'd like to point out to homeowners, those homeowners that are that have an additional property, let's say an investment property, maybe they're deriving some rental income, they will be exempt from this tax.
Which areas are exempt? Or sorry, which ones are which areas are applied?
Well, so in terms of the geographic areas that are going to be applicable to this tax, it's going to be the Lower Mainland, of course. It's going to be Mission, Abbotsford, Chilliwack. It's going to be Kelowna and West Kelowna, and it's going to be the Capital Regional District and the South Island here, as well as Nanaimo and Landsville.
Wow. So if you own a property in Victoria and maybe you have a vacation home or something like that in one of those areas, you're going to be hit with the speculation tax.
You
if
will.
It's not rented out.
If you're not, and you need to rent it out for 6 months of the year.
Yeah.
So if it's not rented out for 6 months of the year, then you're going to be subject to this tax.
And can it be rented out in portions?
Yes, it can. And it actually can be rented as short-term rentals. However, those short-term rentals must be longer than a month for it to qualify for that 6-month threshold.
Okay, so 3 months here, 3 months there.
Correct.
Total of 6 months.
Right.
Great.
Of course, what wouldn't work is if you are just Airbnb-ing or VRBOing your second property for, let's say, 3 weeks here and there, then you would not get that month towards your 6-month entitlement.
Great. Perfect. Well, Adam, thanks for coming on the show here and telling us and educating us a little bit about spec tax and vacancy tax. We're glad to have you.
Thank you, Scott. I'm glad I could be of assistance today.
Perfect. And any other questions, you can get in contact with me directly or Adam. We'd be more than happy to answer any questions that you have.
Thank you very much.
All right. Thanks.